Hi, I'm Jim Paolino, CEO of Lodestar Software Solutions and the host of Lodestar's Lending Leaders. On this podcast, we bring in thought leaders from across the real estate industry and occasionally outside of it to have conversations that are insightful, interesting, and impactful. Let's get started. Hey everyone, welcome to this week's Lodestar's Lending Leaders. We have a great guest, a good friend of mine, Michael Marino. He's a principal of industry solutions at CoreLogic. Wealth of information about title, appraisal, settlement, all things technology in the industry. He's always been generous with his time. I think the last time we actually saw each other, we were crushing some barbecue in Austin at one of that last MBA annual conferences. So I'm excited to revisit this conversation. Just by a little bit of biography here, Michael's in a business development role with CoreLogic with their collateral technology. You support FNC and the Mercury Network platforms. So all sorts of strategic relationships for AMCs, LOS. I know you've expanded a lot over the past 5 years. And then beyond that, you've been with FNC, Gumtree Mortgage, First Tennessee Bank. And correct me if I missed anything there. Got a very better resume laid out for me than I usually get for these, so I appreciate it.
No, Jim, man, that's it. That really is.
Yeah. So tell me a little bit, Michael, about what got you into the industry and what's kept you in the industry.
Yeah. So, what got me into the industry, honestly, was the housing market crash, 2008, 2007, 2008. Had originally, studied finance and was really into asset management. And, just with the changing tides and, barriers to entry with, a lot of folks losing jobs, was really just looking for a great opportunity to kind of get, post-college into the working world. And, got in with First Tennessee in a small group that was doing warehouse lending. So I was underwriting accounts for non-bank mortgage lenders and helping them get access to capital to be able to originate loans. And, honestly, just started out as, just needed a job, wanted to get into the banking world, had kind of always appreciated what the banking systems do for our economy in a lot of different ways. And, mortgage kind of fell in my lap. And then it's been a pretty interesting ride to kind of see how that's played through. I got married and moved towns. And when I moved back to Oxford, Mississippi, got a job with Gumtree Mortgage and was actually originating loans. So went from kind of the back office side of things, really learning a lot about the space, into actually working with consumers on, buying that dream home and learning the process of, how you take things through the GSEs, how you get through the whole underwriting, from application all the way to closing. And then, honestly, I was picking up a to-go meal from a local restaurant and had to wait a couple minutes and sparked up a conversation with a guy that was working at FNC at the time. And, just from a couple of years of learning the jargon of the industry, we had a fun conversation for, 5-7 minutes. And he said, "Hey, we need to chat some more." And so that conversation and run-in turned into my first job at FNC. And, now being 11 or 12 years into the mortgage space and, last 9 years an emphasis on, technology, I wouldn't change it. I really love the space. It really is, it's such a backbone of the U.S. economy and home ownership, and it drives so much, from an economic level, micro, macro, just of what goes on that, technology is not slowing down. And so seeing how technology is continuing to improve the home ownership process is really a lot of fun. And I've been grateful for a company that's been supportive of that and have gotten the opportunity to meet a lot of great people, including yourself, and, brings us here today.
I wouldn't say that much, but I appreciate it. And I forget too that you were originator, because even now in your role, you're dealing with all sorts of different players in the industry, from the large lenders to title to AMC. To a bunch of other factors. So looking at kind of technology as a whole over your time, how you feel like you've been trying to roll a boulder uphill this whole time, or is kind of how is the view of technology amongst these folks changed? Necessary evil?
Yeah, no, it's a great question. And, some aspects of it move faster than others. I will say, I remember being a originating mortgages and getting back appraisals and opening up a PDF. And I had I think it was on legal paper because the checklist was so long, and it was a manual check that I used to even do about the appraisal and certain aspects of it just before I even took it back to processing. And, now it's just amazing how much of that whole process is automated. And, the background of CoreLogic with the acquisition of, the F&C business unit, as well as Mercury Network and Appraisal Scope, is what's really formed the group I work with, which is CoreLogic Collateral Technology. And we really refer to it as our platform business. And the background of those platforms is the valuation space. F&C was launched about 20 years ago, Mercury about 15 years ago.
Mm-hmm.
And, processing today, probably around 500, 600,000 loans a month where we're supporting the valuation piece.
Mm-hmm.
And so seeing how the review and automation around those appraisals has changed from even when I used to do it 10 years ago is really impressive use of technology. At the same time, everybody's looking for progress. And a lot of folks are, they hate the change in the midst of it. They're used to doing things a lot of ways. So I'm sure there's a lot of people in the industry that have seen, great technologies, great, value props around technologies, but a slow adoption process to that. So I think it is, it's a real thing, but it's also something that, lenders have to be really cautious of. You got compliance groups, you got a lot of regulators that are overlooking your shoulder. So you really have to kind of document why you do things and be able to tell your story. I think back to like middle school math, they always wanted you to show your work. I hated that part because I felt like I could get to the end solution faster. But a lot of it today really is you got to explain why you did what you did and be able to kind of back that up from like a regulatory perspective.
I always had awful handwriting, so my 4s were 8s and everyone get confused. So that was part of the problem there. But when you have one of those lenders that may be, kicking or screaming, or I'm sure like myself, you've had conversations with people 3 years ago and now they said, hey, Michael, now we're ready for this. Like, how does that happen? What finally kind of gets people back to the table when a lender is worrying about adopting technology?
Yeah, great question. I mean, a lot of it really goes back to, timing and who you're talking to. There's some folks that, seem to be really focused on compliance aspects of things. And so if you get somebody that's really worried about a compliance or a regulatory piece, Jim, those folks, they're under pressure. They've got to make a change to get back into good standing. And a lot of times those folks will move, really fast. You get on the phone or talk to somebody working about operational improvement, and you really, you got to sell that. You got to talk to the right folks at it. You really got to kind of know your audience, and the more you can learn about the position they're in and, what they're doing and what they're worried about, what they lose sleep over, that's where you can really kind of tailor, your approach to each person individually. Big lenders, they've got larger staffs. They typically have folks very tenured in it. And so they know a certain way. And so a lot of that is really, showing the true lift, the true benefit, whether that's cost savings, whether it's time savings, and being able to articulate that to really kind of show what that change is. And then really, patience, in our industry, there's always, the sales risk of getting, from, agreement to actually, closing a deal. Then you've got an implementation risk of actually getting your solution, through the doors, getting operations to understand it, getting workflows built out and getting it implemented. And then, lastly, we always track and follow the adoption risk side of it. That, a lot of times folks will have a great idea. They think they're solving something, but then they actually get in there and, something may not really meet what they were looking for. So we found the more forward you can get around those things and, the more you can really set yourself up for kind of that longer term success with it. That idea of being, the idea of being like bringing best practices, almost trying to educate at times.
You had said something that I always love to ask lenders as well, as what keeps you up at night? One of my favorite questions. Do you feel like the answers, especially nowadays, are similar?
I do, and everyone's world in so many different ways was changed a year ago. March of last year when the pandemic set in, it really impacted everything we do. And it definitely impacted the lending space. At the time, lenders had huge backlogs. They had massive amounts of loans going through the pipeline. Interest rates were already pretty low. And, one of the first things they did is, the Fed cut the lending rate, interest rates kind of followed and dropped as well. And so those backlogs, they just spiked right when everything was shutting down. And so, I think lenders have had to spend a lot of time in trying to figure out how to keep the machine going.
Mhm.
Not just lenders, even talking to service providers, you can talk to any title company out there. And, we talk to folks that have been turning away business in 2020. I mean, unheard of, instead of like pushing the sales guys to go get more, they're having to tap the brakes just from a capacity
Mhm.
issue. So, I would say somewhat luckily, maybe providentially, our industry really, was in a unique place in 2020 that a lot of folks
Mhm.
weren't, in that, we weren't being shut down, but we were having to try to figure out how to operate in a new model,
Mhm.
with these, record volumes. And so it was really impressive to kind of watch different players across the field
Mhm.
kind of come up with new solutions, watch lenders kind of take on more of
Mhm.
an agile approach to development, to implementation.
Mhm.
And, I've got to say, it was different, but it was a heck of an experience. I'll always remember.
Yeah, I definitely can say the same with just seeing the way the volumes changed, dropped a little bit as everyone was trying to figure out what to do and then just kind of kept roaring back. And the amount, of clients I talked to said the same of like, I'm just so below water right now with everything, just trying to keep up. Do you feel that that's the same for folks looking into the rest of 2021 and even 2022? Are those concerns still in the immediate, what do I do now? Or are they looking a little bit beyond of, okay, now I can actually put this technology in place. So when this happens again, we're going to be able to handle it.
Yeah, it's actually kind of it's a fun dance to watch play out.
Yeah.
I'd say that we had a great, the industry had a great Q1 in 2021. Interest rates are still strong. We've seen a little bit
Mhm.
of uptick. We're headed into the time of year where the purchase market typically kind of ramps up.
Mhm.
The brown grass is turning green, the flowers are blooming. Folks are getting ready for summertime where it's easy
Mhm.
to make a move or make a transition, and so lenders are thinking about that, but honestly, pipelines are still really full right now, and
Mhm.
lenders are. We hear folks that are, they're doing things they didn't have to do last year, as far as getting more aggressive with pricing and trying to think through, how they've put in place over the last year some great, processes to handle these type volumes. Even having to pivot with all this work from home and remote employees, that they're make hay while the sun's shining, that folks are really trying to figure out how to kind of keep a lot of this moving forward. But I do see a lot of people are planning for kind of some corrections in market percentage across refi and continued purchase. And you read headlines every day. I saw something, I think 3.8 million homes deficit that we're at right now from what the economy needs on a nationwide basis and what's out there. So we've got big inventory problems. And so, it's going to make for an interesting purchase market. It's a seller's market. Prices, we continue to see nationwide. CoreLogic's got a great house price index that
Mhm.
shows those changes. And, a lot of states are having, appreciations that are double digit appreciations, not just 1 year, but 2, 3 years in a row, which is, it's exciting, but, also you want to
Yeah.
be very cautious with some of that too.
No, it's been wild keeping an eye on the local market here and looking, to eventually buy at some point and seeing just the change in prices of houses that may have been sold 4 years ago at a price that's now half of what they're asking for, and then that's going to get bid up before that. So it will definitely be interesting to see what changes. I know you had talked a lot in the beginning about appraisal and valuation, and that was such a big part of what you did with FNC. And then I think a few years ago in our conversations, you started asking me more, hey, Jim, what the heck's going on with the title industry? Or tell me about the players in this space, or what exactly is going on here? So I know that's becoming an increasing focus of what you and CoreLogic have been doing. So how have you kind of approached that industry? How is that different than appraisal, and what do you plan to do going forward?
Yeah, no, appreciate you asking that. And with that, our platforms and really where we sit in the mortgage process from a technology provider,
Mhm.
we really are, we're really extravagant order management, vendor management tools
Mhm.
that are out there. We've got a lot of other products that tie into that, a lot of stuff around data and automation. So I don't want to belittle any of those things, but what we've done successfully in the valuation space to grow as we have and kind of build a lot of market position is the ability of connectivity. We have a massive appraiser network of 70,000 appraisers and
Mhm.
200 roughly AMCs that are out there that lenders can manage that valuation procurement process through. We do all sorts of allocation and
Mhm.
automation on those orders. also automating the review on the backside of
Mhm.
those orders. And so with that, our systems are integrated into a lot of the major loan origination systems out there. And
Mhm.
so, what we were doing is kind of taking a look at where we were in the mortgage process, what we did in the mortgage process with our connectivity, and, looking at other areas that we could overlay some of that model into. And, to your point, I think some of the first conversations you and I had were,
Mhm.
how is this supported? How's this done in the title space? And so
Mhm.
really that's where we've been putting a lot of focus. A lot of what my efforts have been focused on the last about 4.5 years is really kind of a business development move of layering some of that technology, some of that background in vendor management, order management, with a new enhanced workflow that supports the title process. So
Mhm.
really post application all the way to closing, procurement of title, review of title, collaboration for fees on closing disclosures, all the way to the closing and post-closing process. And so with that, we launched TitlePort, which is
Mhm.
our settlement agent, title agent, attorney facing side of the solution. And we still manage the lender side out of our key CMS and Mercury platforms, where we've built a new network. So instead of having this massive appraiser network, we also have in tandem with it a large growing title network
Mhm.
with roughly about 21,000 title agents that are on our accounts. We've got full coverage of the national underwriters,
Mhm.
many of the mid-tier providers, integrations into a lot of the title production systems. And so lenders now, through the same platform that they manage their valuation procurement, can also manage their title to closing process.
Mhm.
So from a lender perspective, instead of having to manage multiple integrations from their LOS, they work through one partner and get access to a lot of these different vendors. And so that's a lot of what we've been working on. Right now, from a valuation perspective, we support roughly about 1,200 lenders, as
Mhm.
mentioned, to the tune of about 500,000 loans a month. And
Mhm.
so, with that, what we're doing in the title space is we're trying to also provide a consistent experience for title vendors and title agents, where instead of having to receive orders, over email, secure
Mhm.
email, fax machine, third party, all this stuff,
Mhm.
a consistent way to bring those orders into their environment and help them even kind of operationalize a lot of that communication and flow. And so we found some great partners in the space, and I've got to send you another thanks on helping kind of learn some of who's who in the space and what's going on
Mhm.
in the space. So it's interesting to watch, especially some of the COVID impacts around title and settlement. I want to chat with
Mhm.
you on this some is the digital closing and
Yeah.
kind of how some of that's been laid out. So what have you seen in some of that? Have you seen a lot of big changes there?
It's going to be interesting, and that kind of preempted my question, right? Of why if an appraisal can certainly gum up the transaction process, but a bad closing or not getting to a closing, and my argument could be even worse. So I think it's interesting to see. It seems like there's a lot more problems with the number of providers in the title space than from what I know about valuation, right? Because there's so many different title agents, there's so many different attorneys, and they're touching a lot more of the process, and they're dealing with funds.
Yeah,
So I think there's a lot to deal in. Um, I think everyone wants to do digital closings, right? I think it's like I always say, it's the digital camera of the mortgage industry. The technology's been there for a very long time, um, and I think right now, I don't know. I'm still not convinced we're ever going to truly get there. To be
yeah,
honest, there's issues on the regulatory side with the e-notes. I think there's going to be a lot of state by state issues. Um, I think people are having success with hybrid closings right now, and maybe at least the remote online notarization. And it seems like everyone's trying to be that. There's a lot of companies that have um, a system, and they want to be that digital closing platform. And this is similar to what we saw in 2015 with TRID, where everyone wanted to be the collaboration for the LE, for the CD. And ultimately, the winners, in my opinion, are going to be companies like CoreLogic that already have that huge lender base, because it's the lenders that really drive everything that's going on when it comes to selecting the title agents in most cases, but actually determining what technology gets used.
absolutely.
So I think that you just have so much of an advantage by controlling that part of the process. I also wonder too what's going to happen as you move from a refi market to a purchase market. If the number of title agents that you need to support is probably only going to increase. So what happens now when someone wants, Michael Marino title or an attorney at law to do a closing and they're not on your platform currently? So I don't know what challenges you're seeing now getting these people on the market, or you as an attorney has a AOL email, right?
Yeah.
So there's just so many other players out there, and I'm curious to see what's going to happen with all of the headaches, especially when you're dealing with thousands of dollars that is about to get wired from one hand to another.
Yeah, no, those are extremely valid points, and definitely something we're seeing out there. In line with your comments. Go to the big ALTA, the American Land Title Association conferences, and NS3. Digital closings, e-closing has been at the forefront for ever since I've been participating. Back to 2015, 2014, and really that escalated on the lender side. It was always this cool idea. It was always something they thought about. But it's one of those deals where, like, if it ain't broke, don't fix it. That in-person wet signings, traditional signings were fine, and they were going great. It's what people experience. With that big of a transaction, a lot of people enjoy some of that white glove treatment. Feeling a good comfort level of, I just took on $300,000, $400,000 worth of debt, but I feel comfortable with what happened. So, COVID definitely launched lenders into trying to figure out how to keep some of those balances in play. And a lot of the lender partners we work with have been, very much focused on a digital closing, e-closing strategy. Right before you and I got on today, talking with a large national lender, in their process of implementing, a pilot process to prove things out for hybrid closings. But they can't finish the statement without even going right into. But this also has got to work for our RON process they have coming. So it's been we've been in a great seat to be able to work with our lenders and share a lot of what we know. We've had a lot of success being a vendor neutral solution. So our lenders, who they work with, who they want to work with, is who we work with. And so that's why we have roughly 200 AMCs in our network and so many appraisers, because we want to bring those options out to bear. And so we're taking a lot of the same approach when it comes to digital closing and working with a lot of the big, e-closing providers out there, folks like eNotary Log, the world of notaries, like the Closing Exchange. And, some talking with a lot of the folks like ICE and some of what they have going on, with their full-on solution, and making sure that we can, be a place that for our lenders that utilize certain LOSs have access to some of those tools out there. But you really hit on a great point too, especially as purchase continues to come back on and grow. We all know in the settlement space, purchase is where a lot of times lenders lose some of the control. A lot of times you do have seller-driven, buyer-driven decisions on who the attorney is going to be, on who the title company is going to be. Realtors have a lot of influence on it. And so we've been looking with and talking with a lot of great providers out there, some guys over at Short Track that are doing stuff on the realtor side, and looking at how can we bring our solution that, has a lot of flexibility to it. So you talk about, an attorney that may be, listed on the purchase agreement as the person to close it, but they're not in your network. And so we've been working on some tools, some onboarding tools that we can easily bring those people in through email invitation. We've got trained support folks to help do that. And really, we've put a lot of work into the UI, the user experience within TitlePort, to make it as streamlined as possible. We've even got the great little dominoes tracker across the top that shows you where you are in the process and lets you know, you're not sitting there trying to figure out what's next. It kind of tries to guide you through that. So, a lot of times we say we're trying to beat email. How do we make our solution as good, if not better or easier than email? And so with that, we try to take that idea around design and workflow into pretty much all of what we do with that. And so it's going to be fun to continue to watch it grow out. I think you hit a very valid point. As long as there's so much differentiation on a state by state basis, it's going to be difficult to, for one provider to rise to the top. I could list out 12 different, e-closing providers that we're in conversation with, or different stages of contracting or integrating with, because there's so many different models out there and the industry is not set in stone. Is it going to be lender driven? Is it going to be title agent driven? Is it borrower driven? And one little twist to it, 2015 to 17, 18, from a lender perspective, I like to call to it's like, the Chinese, it was the year of the consumer. The consumer was king. And so we had massive investments into the point of sale providers, folks like Roostify and CloudVerga and Maxwell and some others out there. And lenders put a ton of effort into how do we change, improve, expedite, make so much better the consumer experience on the front end, the application process, that they also want to think to those same folks when it comes to the closing. You know, they don't want to send them to another place.
Yeah, well, I think it's interesting you say the year of the consumer, because I would pinpoint the focus on POS systems to a very particular lender in a very particular Super Bowl ad that then caused everyone to decide to catch up right after that. So the question is, what's going to happen on the e-closing side, right? Because I'm sure a lot of lenders you deal with, they know it's coming, but who wants to be the first person? Who wants to be kind of the innovator at that point? I'm sure CoreLogic does, but what lender is going to want to kind of take on that risk? And how do you balance kind of the fact that these things can be done technology wise, but what about the business hurdles to get there, the risk, the agreements with different providers, anything like that? Like, how much is one versus the other, the things that take up a lot of your time?
Yeah, and I think it's almost like an onion. It's got layers to it that you think of the first layer of I want to implement digital closing. That's the core statement. Right. And then you get into it and you've got to figure out different flows for hybrid versus RON versus in person, IPEN. And then you got to start thinking about, you hit on it exactly earlier, you got to think about the eNote. You got to think about the eVault. You got to think about the custodial aspect of what even GSE implications are to those pieces. And so lenders, when they think like, oh, I want to just start with eClose, there's that's the tip of the iceberg. There's so much more under the water that really has to be figured out if you're going to start talking about sticking with your capital markets background and where you're going to take that loan, how you're going to take that loan to the secondary market. That I highly recommend don't jump in thinking you're going to solve this in 3 months or 6 months. I mean, you really need to consult with great providers out there, partner with great providers out there that are going to go through this journey with you. We all feel like we need to have a solution next day, but reality is there's massive compliance implications to a lot of this. And you really got to think through what you're going to do in those situations. And so, we like to listen. We like to talk with our lenders and hear where they're at. We like to provide feedback. And then a lot of times, that sets us up to maybe introduce the appropriate partner or work with our lender that may already know that partner that they're going to work with in that process.
And when you're working with those lenders in the CoreLogic team and kind of holding their hand through the process, what is that first step? I mean, clearly, as you said, it's not full digital, but what are the things if a lender says, I want to get to this point, where are they starting?
Yeah, so, we like to take on, we really feel like there's a great value add of our solution to today's model, to the model of in-person closings. And so we really like to say, hey, we know you're going there, but let's set something up that really, what I'd say, lays the foundation for how you're going to get there. And so let's put into place a system instead of manual processes, instead of emails and phone calls. Let's put in, what our platforms do. Let's put in a system to manage that communication and to manage those relationships. And when you get the basic workflow and the connectivity out there, you then have that foundation to build your next level on. And so then from there, you can start looking at, if I need to route a closing package differently, we route stuff through our APIs all day long. And that's a very easy change for us to help a lender implement, instead of a process of, realizing and pulling back layers of the onion and realizing, oh, I've got to work with this guy, and then I got to figure out how to get it here. And next thing you know, if they don't have a good provider or partner on that foundation, they're working with 5, 6 different people with that. So we really try to start with, how do we improve what you're doing today with the vision of how can we stretch this across where you're going?
And you had mentioned that digital closings was something that from your whole time in the industry, it's been there, it's been looming. It's something people have started to talk about. Looking forward, what technology is just starting to kind of get to that point where you think it will be the next big thing, assuming we all have wonderful digital closings and we adopt those? Like, what's the next thing coming beyond that you're starting to focus on?
Yeah, so there's some really, really cool companies out there, and a lot of folks that have been in the title space for a long time that are changing the way even a lot of title's done. I'm sure you're familiar with some of the instant title, automated title products.
Hmm.
We've got some of our lenders that are receiving back, preliminary title commitments in,
Hmm.
on average over 50% in less than an hour, which
Hmm.
is just a drastic change from where things used to be, where it used to be a, industry just 48 to 72 hours was the
Yeah.
norm. And a lot of those folks are thinking through automating a lot of the stuff around, one of the big things lenders have right now is not issues of getting the closing disclosure out in time, the 3-day window before closing, but it's
Hmm.
really accuracy of that. And so we're doing a lot of stuff around data and validation of that,
Hmm.
trying to help lenders. I read something the other day that, average, I think in 2020 was almost 10 grand for a lender to originate a loan.
Hmm.
And so, at the end of it, they're coming out on the other side, barely making 2 grand. So how do you look to, even that up a little bit more? And
Hmm.
so, we're really focused on right now a project called Complete Collateral. And
Hmm.
with that, with our plug into the valuation and all the data tied to the appraisal process, we're working with our lenders around the title process and some of the data tied to the title products. So a
Hmm.
lot of our title providers are building to, what CoreLogic has launched is the universal title data structure. And it's a
Hmm.
holistic data structure that covers title commitments, tax certificates, endorsements. And
Hmm.
so our vision is being able to kind of tie these different things together. So instead of when you're underwriting the collateral, the property, and you've
Right.
got to go over here and open this PDF and look for something here, and then you go over to title and you open that PDF and you look for something there, and then you go open the flood PDF and look for something there, and
Hmm.
maybe rekey information in the
Yeah.
LMS. How do you access all of that and really streamline the underwriting process? And so,
Hmm.
one of our big focuses is trying to help our lender partners get to a place to expedite a lot of that underwriting process, which will just kind of take some of that time and touch out of it. And hopefully all that leads back to a better consumer experience.
Yeah.
I love the reality that, Jim, we could go drive onto a BMW lot, this afternoon, and most likely, within a couple hours, we could drive away with $100,000 depreciating asset. But if you and I want to go buy a house, a lot
Yeah.
of times, or Sally Joe wants to go buy a house,
Hmm.
a lot of times in today's market, you're talking 30 to 45 days. And so,
Yeah.
how do we thoughtfully, respectfully,
Hmm.
compliance wise, get to a place where we can help consumers make those decisions quicker, faster, better, and also help lenders get through that process quicker, faster, better, all as
Well,
well.
and just make it a little easier in the same way that if we had a good experience at that BMW dealership, we'd go back for the next car, right? And let's do that in the industry. Let's look at these people as a long-term relationship that you're going to have. We bring in a lot of home buyers on this podcast to talk about their experience, and the takeaway is almost the same: of I'm happy I have my house, but man, that was a pain in the butt, and I would love to move away from that point.
Yeah, absolutely. They're wearing one of those little wrist protectors because they just
Yeah,
signed 60 documents in a row, and
yeah,
their hands hurt. Yeah, no, I'm
yeah.
with you. And that's where I think we're really at a great place that technology is
Mhm.
growing, technology is improving, and we're seeing it impact so much of what we
Yeah.
do. And it's exciting business to be in. It's fun to
Mhm.
watch it kind of all play out. And one of the things that gets me excited, to your question earlier, every day is
Yeah.
how do we position ourselves to help consumers, to help lenders through this
Mhm.
journey. And so that's where a lot of times for me, I look at work as, I get to go to a swimming pool sometimes, like it's great,
Yeah.
and there's a lot of things you got to figure out with that. And so
Mhm.
it's a great industry to be in. I feel like it definitely gets me excited. I get to meet some great people out there, while we're even here today.
Yeah.
Get to share meals, share stories, and just build that relational aspect of it that
Mhm.
makes partnering with so many different folks across the industry honestly a pleasure. It makes
Mhm.
work fun.
Yeah, you did a good job preempting another one of my questions about what gets you up in the morning. So
I'm sorry, man.
making my interviewing job easy. I appreciate it. No, I think you're absolutely right. And it's so great to see someone in your position dealing with the types of lenders that you are still have that borrower focus. Cause I feel like, it can be easy to lose that when you don't ever talk to a borrower in your typical day-to-day job. So I think that's a huge part of that. So, I appreciate you coming on today. To close, is there anything else you want to plug or anything CoreLogic's doing or anything you want to mention?
No, man, I feel like you've led me down a good path to talk about, what we've been up to and
Yeah.
title and, where we're going, with our vision around, complete collateral and some of what we're looking to change and support in the process. And so, I appreciate not only the number of meals we've got to share together
Yeah.
in many different cities, but I appreciate you having me and giving me an opportunity to catch up with you in this type setting, and also just kind of share some of the stories. So I'd say, if anybody has any questions related to CoreLogic, how they play in from either a lender perspective or either a
Mhm.
title vendor perspective or a technology provider in the space, I'd love to chat with you and, be happy to have that conversation. Find me on LinkedIn or, Jim, we may be able to find a way to tag some contact information or something out there if
Oh
it
yeah,
makes sense.
absolutely. Well, we'll cross promote the heck out of this for you.
Cool.
Yeah. Great. Well, thanks for coming on, Michael. Talk soon.
Absolutely, Jim. Have a great
Yeah.
day.
You too. Bye.
Bye. Bye.
Thanks for listening to this week's episode. Please like and subscribe wherever you get your podcasts. We'd also love to hear from you in our comments or at lendingleaders@lssoftwaresolutions.com. A very special thanks to Elena Gardner and Brian Rieger, who help produce our episodes each week. See you next time.